Hey everybody, Boris from BK Force. Welcome to Weekly Technicals for the commodity dollars. For Aussie dollar, dollar CAD, and Kiwi dollar, May 27th to May 31, 2019. Story in the calm dollar land here is clearly some technical evidence of a bottom formation against the dollar. And a lot of it, of course, has to do with the fact that U.S. yields have really compressed this week on fears of a much serious slowdown in the U.S. economy and perhaps even a much greater chance of a Fed rate cut. Now, this goes against expectations that everybody else on the other side of the equation, except maybe for Canada, is going to cut rates soon. Of course, the market is already pricing in not just one, but perhaps even two Australia rate cuts. As a matter of fact, I believe Australian borrowing rates now are below the actual RBA offer on the near-term rates. So it'll be very surprising if the RBA does not cut. The critical question, though, of course, will be if RBA sort of cuts in a one-and-done fashion as RBNZ has done. And that may be providing the kind of solace you're starting to see in the calm dollar land. It's sort of like most of the bad news is priced in. Most of the issues about the trade war are kind of priced in because most of the tariffs and the trade recriminations are about as bad as they're going to get at this point. Although, of course, things could always get worse. But at this point, if you're looking just sort of from a technical point of view and the data point of view, it seems like the sell-off is exhausted in all the calm dollars. And what we're seeing as far as the levels go is that Aussie has found support at the 68s. Kiwi has found a support at 65s. And dollar CAD actually looks the strongest of all in some ways, as it's constantly got rejected at the 35s and now is really probing this 134, perhaps even to the downside. Dollar CAD is the primary event risk this week. Let's take a look at the calendar. Not much on the calendar this week. Actually, a little bit more than there is on the majors, but still not much. We do have one thing that's not on the calendar here that is of importance. We do have some RBNZ governor speak, and I believe that's on Tuesday. Now, that would be only valuable or interesting if Governor Ott basically communicates that they're getting more dovish. Remember, the official statement from RBNZ was we're going to cut rates, but it's pretty much one and done. And for now, we're going to be steady as she goes. If he reiterates that point, that's actually positive Kiwi right now because it doesn't really change the picture. It's only if he suggests that there is scope for further cuts this year that will really pressure the Kiwi and bust this whole bottoming out formation that's taking place technically. But the really big event, of course, will be, I believe, is it Wednesday? I think it's Wednesday, yeah. The BOC, is it Wednesday? Yeah, the BOC, the BOC rate decision. So here's something that's very difficult to handicap because, of course, the market is anticipating the BOC is not going to communicate any kind of a tightening going forward. But the question is, just how dovish will they be? Now, the data has actually been relatively good, and it's difficult to make a case for a rate cut within the Canadian economy because the Canadian economy has actually been outperforming the U.S. economy. And in some ways, this is the interesting thing that I think people are only beginning to wake up to. Despite all the tensions with Huawei, CFO, and everything else, the relationship between Canada and China is much better than the relationship between U.S. and China. And Canada, being a massive exporter of agricultural product as well, could serve as a huge substitution factor for China. So there's just a lot to like about Canada, I think, in terms of growth relative to the U.S. And it's become sort of like the Switzerland of North America at this point, and that creates perhaps a little bit more hawkish posture than the Fed, and provides I think a positive scope for dollar CAD here, or a positive scope for Canadian dollar, negative move for dollar CAD to the downside. So we'll see how that plays out. We also have a Canadian GDP coming in. At the end of Friday, we're sort of mixed on that data set because we have mixed retail sales against GDP. But overall, really, there's little here to think that the Canadian data is massively bad or shockingly bad, as we did see with the U.S. data. And so on a relative basis here, we could have the loonie perform well. Let's take a look at the charts here, just see where things go on the charts, because the patterns are pretty clear here. So let's take a look at the Aussie first. So Aussie, basically, we've had 1, 2, 3, 4, 5, 6, 7 days where we haven't breached the lows, right? So 68.50, that was the low. We've had consolidation. It's a very slow-moving pair. We've got the 20-period SMA hanging over here at the 69 level, but it certainly looks better than worse to the upside here. There's still scope here, at very minimum. There's scope here towards the essentially 69.50s, perhaps 70 if we're super enthusiastic. But then at 70, I think at that point it becomes a significantly tougher trade, because that's the next shove of resistance, and it's very unlikely that the Aussie is just going to make this big V-shaped recovery. But what you do see here is certainly the first evidence of this kind of a deep bottoming out, second wave of bottoming out here, and that means that there's just scope. I think there's definitely more scope to the upside than to the downside. Again, this is much more of a buy to dip story now than it used to be than sell the break. Kiwi even better. Kiwi sort of looking like a V-shaped recovery. Again, the critical thing I think is going to be the RBNZ commentary this week on Tuesday, which I think is actually Wednesday. It's Wednesday to you guys, Tuesday night to us. So we'll be watching that. If they reiterate the point of we're not going to move rates, we are happy with where the rates are for now, that should be generally positive Kiwi. We have a chance here to move to the 66s. But it's the same kind of a story. It's essentially a bottoming story against a relatively decent double bottom of fat finger lows here that could have some retraces to the downside. But as the key thing here is, do the lows hold? And I think the lows are definitely going to hold here for the next, at least this whole week going forward. So buying a dip, if you don't want to chase the price, buying a dip is probably a decent trade here. And finally, this is the most interesting chart, of course, because the biggest event risk. So really been unbelievable low volatility. I mean, Canadian dollar, not really known as a super low volatility trade, and it's been as low volatility as the Australian dollar and the Kiwi dollar, which is just astounding. I mean, it should have twice the volatility of Aussie and Kiwi, and it's been essentially at parity on the volatility scale. Because what I mean here is you literally haven't had a movement of more than 100 points for the last month and a half, whereas you've had periods here where we've had movements of 5-6 figures, or at very minimum 2 or 3 figure ranges, on a monthly basis. So this kind of a tight formation, sort of interesting, and generally always leads to a break one way or the other. Now, what's interesting here is the technicals are definitely giving us a clue at how the break could happen. What we're seeing is a series of lower highs and excuse me, and a break through the 20 SMA. So in a classic technical formation, this is really giving you a clue that we're ready to go lower. So if we get this BOC catalyst of, hey, we don't see any reason to cut rates in the near future, we're like steady as she goes, that should be a positive move. The critical thing, of course, here is going to be the 3350. That's the big support area. It would really need some very, very bullish flows to break through that level. But overall, the way the technicals are forming, it feels like it needs to coil to the downside. This short volatility break breaks to the downside, and as it does, the longer term formation here certainly opens up the scope to move towards, to move lower. Now, if we completely have a shock to the system and we break, and the BOC hints at a rate cut, yeah, then it's a completely different story. If we take out the 3530s and close above that, this whole formation, which has been hinting at a downward move, gets completely destroyed, and now we're looking at a much higher and a stronger move that could challenge the 136 highs. But that's really going to be organically driven off of the news flow this week. For now, the clues point to the downside. The market is tilting to the downside. So if you want to sort of front run and take the clues from the technicals, it feels like dollar CAD is much more of a sell than it is a buy as we go into the week. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.